Welcome to the show, Total Financial Solutions Safer Money Hour. I'm Eric Hallaby, along with special guest. You'll get to meet her in just a second. But joined by Jeff Gerard. Look, talking about your family's financial life. Total Financial Solutions Safer Money Hours here every week at this time. Trying to help you get out of debt, manage money, and of course, plan for your retirement. As we know, occasionally in life, you have to accumulate debt. It's not our favorite subject, but there's a difference between good debt and bad debt, and assets and liabilities. So how do you build a life where you can sit there and consistently make the right decisions? At least more often than not, you can do so by having the right information, being surrounded by experts and taking in information. Look, at a time when information is everywhere all the time, ask your local computer hack, if you will. You can find out anything about anything. I want to give you an update on the Wealth Summit that's taking place this Thursday at Tournament Players Club, TPC. Come and join a group of experts. In fact, Catherine Austin Fitz is one of the speakers. She's a nationally recognized speaker specifically from Federal Housing Authority, Assistant Secretary of Housing. Very, very insightful. We had her on our show a couple weeks ago. Very insightful when it comes to the growth of the economy, the direction, what's taking place, so that you can understand how you can, in fact, profit out of the next year, 2, 3 years as the economy is changing, right? You would agree there's some big changes happening, and some of those changes that are taking place are going to affect your pocketbook. Do you think interest rates, mortgage rates are going to stay the same? Do you think the market's going to stay the same? I think there's going to be a big push and a change, Jeff, when it comes to the overall economy with infrastructure spending. We're not going to get debt under control maybe as much as some thought, but supposedly jobs are coming back.
Well, and that's why I would implore you to come to an event like this, because we have folks that do have their hand on the pulse, so to speak, when it comes to economic changes that are coming down the pipe. So not, like you said, not if, but when those changes come, how can you be prepared? And that's why we have panelists from different areas of wealth, of finance, and they can give you some tips and some tricks and maybe some strategies that might help you navigate around some of these changes. I want to get to our guest there. I'm pretty excited about this. Marcy James, thanks for joining us on the show. You're with Cross Country Mortgage. Tell us a little bit about yourself, how long you've been in the industry, and more about Cross Country and why you guys are different.
Absolutely. So I'm from Santa Clarita for the last 33 years, so this has been deep-rooted home for me now.
Sure.
Raised 5 daughters out here, and got in line with Cross Country Mortgage about just celebrated a 4-year anniversary. I knew that my career had hit a little bit of a plateau, not in a bad way, but in a very good way. And the next thing was to branch out on my own. There's a lot of great companies out there, and Cross Country happens to be one of the best. We're a nationwide company. I am the branch manager of the local branch here in Santa Clarita, also in the Los Angeles division. So we help homeowners buy homes, refinance homes. What makes us a little bit different is we have a product called Fast Track where we can close in 21 days. We put our files through underwriting prior to them finding the home. So when they are out there making that offer on the home and they're competitive with somebody else, they don't have a pre-qualification letter where somebody's looked at their credit and maybe did a little bit of an income analysis. They have a full underwrite approval pending an appraisal.
A great question there you kind of lead into. A lot of folks are confused. In fact, they think they're the same, pre-qualification and pre-approval. Those are night and day differences, and especially when you're trying to negotiate a deal on a house.
That's correct. A pre-qualification means somebody has ran your credit and you told them what your income is, and they said, yeah, I think you most likely possibly could get a home. You should go shopping. A pre-approval is somebody has ran your credit, received your asset information, done an income analysis according to the federal tax returns for the last 2 years, corporate and personal, looked at your W-2s, looked at your current pay stubs, in some cases got a verification of employment up front, especially if they were needing to have some overtime or bonus or commission income that needs to be included in there because we do average that income out.
Nice.
And we've done a complete DU analysis. DU is desktop underwriting. Every file gets put in through either LP, which is the Freddie Mac system, or DU, which is Fannie Mae system, and we get an approval code.
Now,
so
Freddie
we
Mac,
know what we're looking for.
Yeah, Freddie Mac and Fannie Mae folks, you might have heard this. Freddie Mac, Fannie Mae. It's the initials of the Federal National Mortgage Association. Its job is specifically to buy the loans. It's basically designed to pull that money away from the private industry.
Correct.
And and they have certain guidelines.
And give Ginny her due too.
Yes, and Jenny May, of course, Government National Mortgage Association, which one of the radio hosts I used to listen to said, "Oh, put your money in there; it can never go away until the 2008 housing crisis." That's
how
where you
it
put
did.
your safe money. That's where you put it. No, but part of the process of you guys designing a plan that goes down these lines, in other words, through the Fannie Mae or the Freddie Mac system, is they have guidelines, and they're pretty stringent guidelines.
They're black and white. There's not a gray area.
Yeah.
A lot of people are like, well, what does it matter? It does matter. It's black and white. Lending is black and white. We should have never gone away from black and white. We wouldn't have ended up in the mortgage meltdown.
Yes.
However, because we did go away from the black and white, we ended up in a mortgage meltdown. So now people have to qualify. They need to have money. They need to have FICO scores. They need to show they're credit worthy. So these things all packaged together with a multiple of other items is what's keeping us from having a mortgage meltdown. We all see home prices just jetting up there again.
What's the reason for that? Any idea?
Supply and demand.
You think more people want to move to Santa Clarita than...
It's supply and demand,
Yeah.
but it's not only Santa Clarita.
Because we're seeing it in the Antelope Valley as well.
We're seeing it everywhere. I mean, I have an affiliate in Wisconsin. She actually is she's another branch manager for cross country out there. She put her house on the market. It sold within 2 hours, and they did a 14-day close. And she said she had 16 offers.
Now, that's the way it was when I sold my house in 2002. Literally, we
Yes.
listed the house, and you do a few little touch-up things as you're kind of going through preparing for sale, and while
Right.
the contractor was in there
Putting
doing
the
some
lipstick
work,
on.
yeah, all of a sudden somebody's stepping over them and walking, and they couldn't even get upstairs because we were refinishing the wooden stairs, and they still purchased the home. And
Correct.
a lot of that process, there's a little bit of a frenzy that kind of seems to be there anyway. There is no more loan availability for the guy or gal who is a small business owner who might write off a lot of things. Is that a myth or is that true?
That's actually a little bit of both. So you're correct. For the traditional Fannie, Freddie, Ginnie, or even the jumbo classification, there is no plain vanilla loan program. But there are programs that have come back in. Bank statement programs are out there. We don't
Where you
call
can
them,
spend down the assets. In other words, if I have $250,000 just sitting in my checking account, and I can use portions of that to make some of the house payment.
That's
or
an
no?
asset depletion. That's a little bit different. Bank statement is for the true self-employed borrower who writes off everything on their tax returns, but they can show over the last 12 months they are consistently depositing 40, 50, 60,000 into their business account.
Yep.
They show their business is flush. It's just the way that they're marking their write-offs. So the bank statement program is out there.
And what is the penalty, if you will, interest rate wise for that?
Interest rate rise, you're going to take a hit. That's going to be combined with the housing type, down payment, FICO scores, etc. I have one in escrow right now, and he's taking a 7 1/8 ARM. But he had
Wow.
he had two short sales in 1 year, 2 years ago.
Oh, my.
Both for job relocations.
And he was
So-
still able to.
And
That's not bad.
he's closing next week. So yes, he knows he's going to take the
He's going to get
hit.
spanked, is what we call it.
Yeah, he's moving back to California from Ohio. But literally, we were able to get him through the system with 2 back-to-back short sales.
Wow.
And now he's buying another house.
So short sale. Let's get that clear. You walk through the system. Your home you purchased for $600,000. Maybe you put some money down. Maybe you even took out a cash loan. So by the time it comes to sell the house, it's just not worth
What you owe.
What you owe.
Correct.
And we saw that happen through the 2008, 9, even 10, 11, if you will, and on, where a lot of folks are just trying to get back, whether you took money out of the house or you just purchased it with 3% down back in the ninja days. I'll get that in just a second. But if you remember right, this was a time when there was a lot of supply, a lot of houses on the market, and so buyers had the choice. And they would say, I'm not paying that price, I'll pay this price. And as it got lower, people got stuck. So the bank had to make a choice. Either continue to take a late payment from this person, or they're going to walk away, or accept what we can get from it and call it even, if you will. Maybe we're going to still punish that guy and he's going to make some payments back for a portion, or
Or he got 1098, I believe it was.
1099, yeah, through the process.
Right,
That's
for the deficiency.
And then ended up having to claim it on their taxes. There was some pushback where for a while there wasn't that. You had a certain amount you could write off. But others had to pay taxes, and basically it's the same thing, if you will, student loan money, right? When President Obama outlawed private student loans, and the government took all of the student loans, who became the collection agency? The IRS. And when they tried to do a federal takeover of the health insurance industry, if you didn't pay your health insurance payment, tough luck. Well, you didn't have health insurance. But today the federal government says, no. We'll take over the health insurance. So guess now who is the collection agency on your health insurance? The IRS. So it's similar in the sense that if you have the government getting involved in any industry, they generally are not making things less expensive. They make things more expensive. But tell me how the implementation of a Fannie Mae or Freddie Mac, which are government loan guarantors, if you will, kind of private, public. One of the first option trading things I ever did in 1998 or 9, 7, whatever it might have been, was actually Fannie Mae. I remember that. Just like your first girlfriend, right? Or boyfriend. My first option stock had a special relationship because I made lots of money in a very short period of time.
Right.
So I had to learn about it. I'm like, oh my gosh, this was by accident. Same thing. Today they're still publicly traded. I don't know if you know that. Can you buy stocks on the?
You know, I don't know that.
Okay,
because
we'll find that out
because
for
there
you.
was a change.
There
you know.
was.
When that change happened, I don't know there was a pullback. You know, at one time Fannie Mae was worth like 12 cents.
Oh
I mean,
my
it was
gosh.
just crazy. So I'm not sure how that was ever recatapulted.
So we'll take a look and see, folks, and I'll get you the update on that. But here's part of the challenge. A lot of folks go out and they say, I'm going to buy a house. I think I can afford this. And yet they didn't have that pre-approval letter. Cross Country Mortgage gives them that option. What does it take to do that? How hard is it to do?
Well, once I have all the documentation, it takes about an hour for me to do the analysis, depending on the tax returns. If they've got, 7 S corps and a couple LLCs, it might take me a little bit more time. But it takes about an hour to complete the process. The biggest thing is getting all the documentation in. When I send out my item list, I don't mean 1 of 7. I mean 7 of 7.
Yeah, they think it's like school.
Yeah,
Just
what do you need the federal for? What do you need W-2s for? So, it's just about an educational process. But once they understand, it's truly for their benefit. Like I tell my home buyers, when you walk into a house, you don't want to fall in love and say, wow, this could be our home. I hope we could possibly afford it. You want to walk in there and say, yes, this one will work, we're writing all for, or no, this one doesn't work.
Yeah.
We put you in the right, shop in the right arena, because if you're in the wrong arena, it doesn't matter what you like.
It's difficult because there's a lot of heartbreak when people emotionally buy into that house and then you try to backfill and make the numbers work. It's better to know what category and what bracket you can shop in so that you're not stuck, being disappointed. And more importantly, you're not going to get upset with your lender and the mortgage broker because it's not their fault.
Or the realtor who's
Right.
out driving him around. Like I tell, my realtor partners, don't put him in your car unless you've talked to me.
That's right.
Unless you just want to spend Saturday afternoon shopping
Visiting.
with somebody who
Yeah.
may not qualify.
You want to go visit?
If you've
Yeah.
got nothing else to do.
Yeah. I mean, everybody that I've talked to lately they put the cart in front of the horse, and that is the setup for heartbreak. I've seen it
Yeah.
time and again. But a good realtor or a real estate agent will say, are you pre-approved? Are you pre-qualified? Where are you in the lending process?
And have that conversation with the lender.
Yes.
Make sure and have that conversation.
I think what it does is it gives you a chance to understand. Now, you've all heard my philosophy, whether you've read some of our articles in Inside SCB Magazine or listened to the 2,100 or so radio shows we've done over the last 13 and a half years. Simple this. And we may disagree on this, but the house you buy for you to live in is not the kind of asset that you believe it can be. Now, it is or can be, but if you pay it off, what do you still have to pay? You still have to go to work for property tax. You still have to go to work for maintenance. I always like rental property as a way to fund my liabilities, meaning if I own this building and I want to buy a nice car, I can go to work hard and buy the car, but then I have to always work for that car. But if I work, my efforts create an asset, this building, and then the tenants go to work every day and they pay for my car, my liability, a car which goes down in value, is now being paid for by an asset which generally goes up in value. So rental property value, multiple units, is that something you guys offer?
Yes, and I'm a huge believer in, I call it the bank of OPM.
That's
Other
right.
people's money will pay off your home.
That's right.
You need to maintain it. You need to be a fair landlord. You need to make sure that property has a yearly checkup by a home repairman, a roofer, painter, etc., because you want to keep them in good shape. You don't
Sure.
want to let them become run down. But I'm a huge believer in it because it's passive income as we all naturally grow older, to buy the car, to pay the vacation, to pay our property taxes, even if we paid off our primary home.
That's right.
I think real estate is one of the foundations of all wealth. And I think the more you have, the better.
So tell me about your rental property programs. If I want to buy a single family, 3-bedroom, 2-bath house, what kind of programs does Cross Country have
As an investment, you're
Yeah.
going to put 20% down.
20%.
25% gets you a little bit better rate, and you have to qualify. If you already have rental property, we can give you rental income on it.
They're still counting 75% of the rental income?
75% would count for vacancy loss and repairs and maintenance, et cetera.
Yep.
So we just add that in. If you currently have rental property, then we can actually give you 75% of the rent
That's right.
expected on that. We have to get a form through the appraisal where it's actually the rent analysis of what the fair market value would be.
Yes.
So we can actually give you rental income on a property you have not even purchased, which will help
I
offset your
see.
debt to income
Oh,
ratio.
that's very nice. So we just do an analysis, just like an appraisal. They go out and they say,
There's
I
a
want to buy
second
this
form,
house.
a rent analysis that comes with it, a rent survey.
Very nice. And then we're looking at 20, maybe 25% down. Cross country is not just in California. You can
No.
buy properties outside of California. What states can?
I'm licensed in 31 states, and we loan in all states. We just got licensed in one of the hardest states ever to get licensed in, which is New York.
New York.
New York is
Usually
very
it's a
difficult.
whole other country, is New
It's
York.
like a whole other country. New York and Hawaii, they're like separate countries.
Yes, in our
But
industry, we say there's the United States and then there's New York.
And then there's New York.
Yes.
But we actually do loans in New York and in Hawaii.
Very nice. And so, folks, if you're looking at buying rental property, you speak with your financial advisor. That could be part of your plan. The objective is to say, I want a partner. And that really matters to us. We've brought partners to you before in various parts of your financial life, whether it be, homeowners insurance, auto insurance, because your goal is going to be to go out there and to build an asset base. It does not happen overnight. What we used to have was what we called the ninja loans. No income, no job, no assets. No problem. Doesn't exist anymore, in my opinion.
Nina, no
Yeah.
income, no asset.
Yeah, Nina. We called him Ninja. I don't know why, because Ninja was cool. Nina's a girl's name. We're like, yeah.
Marcy, I have a question for you. What
Yes.
about someone that has a primary residence with a bunch of equity in it? Let's say
Yeah.
they bought years ago and now their home is just worth way more than they owe on it, and they want to use some of that equity to start purchasing rental properties. Is that something that can be factored into the process?
Yes, is what we do is they're not bridge loans. We do a cash out refinance. They pull the cash out, put it in their bank account. They just want to make sure that what they're doing is going to earn them the return that they expect. We want it to be for the betterment of them. And cash out rates are a little bit higher than a traditional fixed rate, so we want to make sure that makes sense as well. But if you have an appreciation on a rental property, plus you have somebody else paying for it, the numbers primarily will work. I have had some people come in and they want to buy something, and I can see they're completely out. They're going to be flippers.
Yes, you're right.
They're going to be flippers. They're going to buy a
Yes.
fixer-upper.
Well, I saw both a YouTube video and Saturday I saw the show, so I can do it.
You can do it?
Yeah.
You watch YouTube?
Yeah, YouTube twice. I saw
Yeah.
two.
You saw two?
Doesn't-
Yeah. So you could actually pull money out of your house.
do it. I'm a
You
flipper.
could quit your job.
Yes.
And you can go buy a rundown place. No.
It's called a money pit. Have you ever seen that
Yeah,
show?
exactly.
Never ends.
So yeah, as long as it's in the right thing. I also talk to some borrowers. There's some that come in. I had this lovely couple come in. You can see you can just see they really have their stuff together, taking care of their credit. They've got the 3 savings account, the home, the fund, the future auto. You can just
nice.
see that they've done the right things, and they really wanted to do something different. They wanted to be able to help their parents and buy a house. So I talked to them about a 4-unit. And for them, because it's owner occupied,
Yes.
they got the same rate. So they were able to pick up the 4-unit in the valley. They paid more than they would for a single family.
Sure.
The 2 that they're renting out, because mom and dad live on one that now keep the kids while they work, and so they live there rent free. But the other 2 that are rented out are covering the entire mortgage.
Nice.
So there are ways to get strategic in this, but it has to be the right mindset. They have to have had their financial planner involved. They have to make sure that they're doing the right decisions and not jumping on that, flipper. I'm going to be a
Right.
flipper. It's my
Yes.
new career. I'm
Yes.
tired of working the white collar job. So we just want to make sure that we're advising them in the right manner, because everybody has a dream, and we're not to be dream smashers, but we better be given right counsel if we're in the
Yes.
position that we're in.
Look, folks, in the financial world, there is a privilege and a responsibility for us to, one, give counsel and advice to ourselves, friends, and family, but also to those that trust you. And they walk in the door expecting you to give them honest and straightforward advice. Make sure you have a mortgage professional that is a part of that process, meaning they're not just trying to get you into a mortgage that they know in 8 months you're not going to be able to afford, or the moment that property taxes are due after the supplemental assessment, right? Oh, I thought property taxes were here. Oh, no, you bought the house much higher than it was. And you get that second or third bill that you weren't expecting, and suddenly you now are upside down financially. there are mortgage people out there, and maybe professionals is a loose term, but their job is just to get you in a mortgage. They check the box and they move on. You have a significant amount, Marcy, of repeat customers, of folks that have referred to you. Tell me about that.
I have some clients that have now referred their children to me, which is kind of scary because it kind of dates me a little bit. But on the other hand, 3 of my daughters are married and bought homes, so it's like I get it.
Yes.
But they've come back time and time again. And I think the key, and the same thing I say to my loan originators that work for me, is never tell a client what they want to hear. Always tell them what they need to hear.
Yes.
And make sure you drove home what they need to hear while listening well to their desires. Because that's the difference between giving advice and making their dreams come true.
Yeah.
There's a big difference between the two.
And sometimes, folks, you'll deal with professionals who say, "Oh, I'm brutally honest." And I always say, "Listen, you're just brutal."
Yeah.
Because there's a way to still be kind and honest. There is no such thing as being brutally honest and doing somebody a favor. I think you understand that sometimes people are disappointed because your transaction doesn't make their dreams come true. So, Marcy, sometimes we see that people will come to you with a great idea and a plan, but it might be too early. We just can't do it right now, but we will in 6 months or a year. So you guys will work with them to either get their credit up and running or maybe to get some bills paid down or whatever?
Right. We do that all the time. People will come in, and a lot of people have no idea what's on their credit report. I tell them, go to annualcreditreport.com every year and check your credit. But a lot of people have no idea what is hanging in the background on their credit report. The medical bill that they thought the insurance paid, that's now a collection that sold to another collection, was sold to a third collection, and their credit's a mess. So we do have to do some cleanup on that. Or, maybe they're paying way too much on a car and they need to refinance it into a lower rate because things have shifted in the last 2 years, and maybe they can still do a 4-year, not go back into a 6-year, and that'll save them $200 or $300 a month. There are strategic ways, when you really understand credit and how it works, that you can advise a client what's going to help them achieve their goal without harming them, whether it be through time or dollar.
So if somebody has a car payment and they have 4 months left on the car payment, do you guys still use the 6-month rule that says we don't need to really count that?
We don't count. It's under 5 months.
Under 5 months.
Yeah.
Okay. All right, folks, we're going to continue with Marcy James. You're listening to your hometown station, Total Financial Solutions Save for Money Hour. I'm Arif Halaby along with Jeff Gerard, and we'll be back in just a minute.